Traders, Cousin Vinny coming to you from theclosingprint.com on July the 19th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which closed near highs last week. NASDAQ was a bit lower, off a little bit more than 1.7%. We did see the Hang Seng pulling back and emerging markets as well. The FANG stocks are mixed going into this week, seeing a little bit of weakness as all of those stocks hit recent highs into the seasonally strongest month of the year. The bond stock ratio is bullish. Junk and HYG are bullish. Dow Composite, S&P 1500, the XII are all bullish going into this week. Tick and Tick Q are also trending. They're bullish. NYMO and NAMO appear to be bottoming. Breadth is improving. Put-call ratio is starting to improve as well, showing a bit more calls on the indexes were bought last week versus puts. And we're starting to see more follow-through to the downside on the US dollar. There's a potential for a triple bottom on the greenback. We saw most of the bonds remain in their ranges, with IEF and TLT flat. The 10-year yield still drifting a bit lower. That needs to improve if you're bullish on equities. Everything else, for the most part, our trend oscillators and indicators are all giving us a more bullish look for the week ahead, with the heat map improving for builders, transports, retail, discretionary, materials, industrials, all of which showed relative strength last week, with the XLY-XLP ratio still bullish and rising. Energy, of course, has been weak. International markets mostly neutral, with Europe showing some strength. China, Japan, and Asia. The Far East countries are a bit weaker. Finally, we'll be looking at some IBD 50 names that look good and set up above the 9 and 21 day for the week ahead, in addition to MarketSmith, Growth 250, and the top volume percent gainers in green. The Dow Industrials also had some of their constituents moving higher. We'll look at those names. Bukowski, of course, is showing 5 of 5 green, with the CPI signal green since June the 29th. It is at 91.7%. That's bullish, with 5 bearish patterns, 55 bullish patterns, and 227 patterns waiting for breakout. This week, again, we're short-term swings. We'll be doing a lot of day trades, keeping an eye on VIX, of course, with SPY and the S&P 500 gamma support at 320 and 3200 respectively going into this week. Here is the Dow Composite daily time frame, showing relative strength as RSI continues to move higher. Price action back above the 200-day moving average and above the 9 and 21 day going into this week. This is more bullish than bearish, with MACD above its signal line and volume showing institutions have been picking up shares in the Dow Industrials. This particular index, the Dow Jones Composite, has 65 stocks from the industrials, utilities, and transports group, which reflect Dow theory. In order for the markets to be pulling back, Dow theory states that these stocks in particular should be following through, trending lower and not higher. So watch for a close below the 200-day, 9 or 21 day for caution and sell signals respectively. This chart is more bullish than bearish, so I don't see that happening in the short term, especially with RSI rising along with price. Adding additional stocks, we have the ARCA Institutional Index, the 75 stocks that are most commonly held in institutions' core portfolios. You can see the weightings in these stocks. A lot of people look at the NASDAQ 100 and marvel at the fact that the top 10 stocks comprise over 50% of the weighting of the NASDAQ 100 and find that worrisome. If you look at these 75 stocks with respect to weighting, you can see that we're more evenly distributed in the stocks that make up this index. So the fact that this is moving higher and producing Blue elder sticks tells us that the index is taking a pause at the moment, but has been trending inside of standard deviation 1 and standard deviation 2. This chart is more neutral, which could turn to bullish fairly easily if we stay in between the bands between standard deviation 1 and 2 this week. MACD is above its signal line, and we do have the 50-day moving average above the 200-day, crossing over back in the second week of June. The NASDAQ 100, of course, last week took a little breather as most of the top 10 heavyweights from this index pulled back to the 21-day moving average. So we looked at this as a potential for rotation into other sectors that saw strength last week. We'll get that in a minute when we're reviewing sectors. For the most part, NASDAQ is taking a breather, but it's in a bullish trend, higher highs and higher lows, with a Cope box cycle flattening out a bit, but certainly not at extremes that we saw back in February. The fact that this cycle peaked at a higher level going into the month of April just shows that the strength of the reversal was quite remarkable, and anyone that was trading during the month of March can attest to the strength that we saw in the indices. Even CNBC had comments about it on a daily basis. Of course, here is the S&P 500 spiders. We closed near the top of this range again last week. The second week of June, we got rejected to this area, and last week we consolidated right underneath that level. Note the wicks underneath these candles. Price action is above the 9 and 21 day. The 50 and 200 day crossed the week prior. We have RSI above 50 and rising. MACD is above its signal line. And volume was decent for the most part, even though it was a little bit below average on Thursday and Friday. This chart is more bullish than bearish going into the week, so either we get rejected to start the week and pull back to the 9 or 21-day moving average, or we break out to new highs. Of course, we could always consolidate like we seem to have been doing lately. Back in June and again in July, we had spent a lot of time in choppy action, moving sideways in range-bound trade rather than pulling back in price. Tried to follow through last week off of that Wednesday pivot off of the 21-day moving average. Wednesday, Thursday, Friday stayed in a tight range, so there's a possibility that we could stay in a range into this week as well. The Russell 2000, of course, moved sideways Wednesday, Thursday, Friday. A little bit more relative strength on the index. Looking for small caps to outperform. If we see these stocks continue to move higher, that could foretell a risk-on move in the markets. We'll cover the other risk-on indicators in a minute. Junk and HYG for starters. The bottom line is the Russell 2000 isn't breaking down. It is above the 200-day moving average. We're looking for a push away from the 9, 21-day, and 50-day this week. With RSI above 50, volume starting to increase, and MACD above its signal line and rising. The S&P 1500 composite, S&P 500, S&P 400 mid caps, S&P 600 small caps, still on a buy signal. Above the 9 and 21-day moving average, top of the Bollinger Bands, and the histogram is remaining above the signal line at 2. As price action continues to give us a bullish direction, breadth is improving as well. In these 1,500 stocks, the S&P 500 top panel making higher highs, higher lows. Mid caps in the middle panel, higher highs and higher lows. And of course, last week we were looking for the small caps to improve. It got back above the 200 period. Now we need to see a higher high. It remained above this low at 32.50. Breadth is improving. Bottom line, this chart is more bullish than bearish going into the week. Then, of course, the New York Stock Exchange, 2,900 stocks, just taking a simple measure of new highs minus new lows. What we want to see if we're bullish is a move above the zero line that's sustained. We've been seeing that since April and May. Remaining above the zero line, histogram bars continue to rise. The number of new highs versus new lows is net bullish. Moving average is climbing, and the New York Stock Exchange advanced decline is making higher highs and higher lows. We have the price action on the index above the 130 period moving average. That's 1/2 year of price action. And we ended the week with all green elder sticks, which tells you that there's no pause in the markets at the present time. So we're looking for the NYSE to test this level overhead at around 13,000 in the short term if this breadth continues to improve this week. What would help, of course, is VIX continuing to give us a bullish signal. As long as this is green, the 60-minute time frame ratio between VIX and price action tells us to anticipate higher highs and higher lows. So long as VIX continues to move lower this week, we would expect to see a breakout and a move above that level overhead at 3240, 3250 in the short term. The Wilshire 5000 also continues its trend higher. Kopach curve is sustaining this bullish move as price action continues to stay above the 921-day and 50-day moving averages. RSI is above 50 and rising, which is telling you to respect the trend. These 3,900 stocks, a little misleading. It's not actually 5,000 stocks. It hasn't been for quite some time. It's around 3,900 stocks, a broad measure of market participation. If this continues to move higher, that's telling you that institutions are buying. We'll look for tick cumulative to continue to give us a bullish signal this week, going into the latter weeks of July, the seasonally strongest month of the year for technology. So we'll see if technology can continue to give us some strength by bouncing this week after taking a breather last week. The bond stock ratio between the S&P 500 and the 10-year bond continues to give us a bullish signal, telling us to favor equities over bonds when this ratio, the red line, is dropping. Confirmation when it drops below the 65-period moving average, remaining bullish going into this week. Additionally, if you look at junk bonds as a measure of risk appetite by investors, if this is moving higher, it's telling you to anticipate bullish equities. As you can clearly see in the month of February when we dropped precipitously, this is telling you that risk appetite was exactly the opposite of what you want to see if you're bullish equities. You can see the March 23rd reversal clearly delineated in junk bonds as well as HYG. High yield corporate debt back above the 65-period moving average. Very bullish action last week. RSI is above 50, rising, and volume has been increasing. That said, you might say, Vinny, why is TLT moving higher then? You just said the bond stock ratio is bullish for equities. That's true. And a lot of investors will go to TLT for safety if there's enough people there to buy. The markets will look for follow through this week as well. Do note, though, that we're making lower highs. There is a possibility we could lose this level if the bond stock ratio continues to give us a bullish signal. I do like TLT for safety trade, but for the time being, I have no position. I only have a position in AGG, the Barclays Aggregate Bond Fund. When we got long on this breakout and have been long ever since, we took some profits off into strength. If you take this little wiggle out back here during the COVID-19 collapse in the markets, you can see there's a pretty decent trend all the way up to 119. Looks like we could be at 120 at this rate going forward. AGG is basically the kitchen sink of all types of bonds, collateralized mortgage debt, etc., which has a lot of exposure to the real estate market, which a lot of people are concerned about, with the economy not opening up as strongly as many would like. That said, if AGG starts to be affected, we'll be the first to let you know, as we do have a position in this particular asset class. In addition, a few weeks ago, we mentioned that the Fed is buying individual corporate bonds. In this particular case, we're looking at the LQD, investment grade corporate bond ETF. You can see right when the Fed started to talk about buying individual corporate bonds, this one took off to the upside, continues to be in a bullish trend. So as the Fed buys these assets, we'd expect to see this particular ETF continue to appreciate into the foreseeable future. US dollar continues to move lower. There's a potential for a triple bottom down here in the mid-90s, though it does look like we're moving a bit lower going into this week. The trend is down. It does benefit international companies, though, that do report in US dollars. And for those of you who listen to the media about the dollar moving lower and how bad it is for the markets, etc., just remember back in 2009, we're way down here in the 70s for the US dollar, and the markets didn't seem to care at that time. 2011, we started to move higher, higher highs and higher lows. Now we're back up here in the 90s, and some people are concerned because we've been pulling back on a weekly time frame, which looks pretty horrible unless you zoom out and look at the monthly time frame. Just remember that we came off a low that many of you were concerned about back in 2009 if you were in GTO's room or Day Trader Rockstar's room. We were talking about the dollar weakness. Many people were freaking out back in 2007, 2008 when the markets were dropping rapidly at the same time. So just a bit of caution before freaking out over a 10-point move over the last 6 months relative to what we've seen in the past. Copper, as we mentioned over the last few weeks, as this continues to move higher, breaking above ever higher levels of resistance. We're at 52-week highs, consolidating. We're still in a very bullish trend. We've had these little pullbacks to the moving averages repeatedly. Buyers stepped up. This is a reflection of the underlying strength in the economy as construction stocks, builders, home improvement, and building products, manufacturers, all in this group, signaling that those stocks will continue to move higher. So keep an eye on copper. We're looking for a breakout, whereas a pullback would be a warning signal. Gold also consolidating, still trending higher highs and higher lows above this 1800 level after breaking out, has been moving sideways in time. If traders and investors start to think they need safety or they get fearful, look for gold to continue to move higher into the second half of the year. Finally, if you look at West Texas crude and Brent crude, as long as this continues this march higher, this is bullish for equities as this has a positive correlation, as we can clearly see when it sold off in February and March on the COVID-19 news. Now we've reversed, continue to push higher. Over the last 7 weeks, we close ever higher in each weekly range. You can see these last 2 weeks with wicks underneath the candles that we are pushing a bit higher. We do have some resistance overhead as well. So if we do move higher, that would be bullish for equities in addition to what we're seeing with high yield corporate debt and junk bonds. Many are concerned about the weakness in the big cap FANG stocks lately, that might be signaling a change in direction. What I'm looking at is the sector heat map, which from left to right each week, this is updated on a Friday. We're seeing more lime greens and yellows, fewer reds, more light oranges, if you will. Some weakness in IBB, XBI, biotechs last week, in addition to real estate, REITs, and technology. But it's tempered for the most part, and it's not deep red like it was in 629. What I'm seeing looks more like rotation, especially if you consider that XLV Healthcare is at highs. XLY made new highs last week. We see XLK, while it has pulled back, it's at the 21-day moving average. Materials, transports, with the industrials performing last week, banks are so-so, but there's really no indication that we're going to just roll over here. It looks like we're seeing rotation, in my humble opinion. In addition, that rotation to consumer discretionary versus consumer staples continues its upward path. This looks more like 2019 than it does February of this year, where the markets rolled over as institutions showed their hand by buying staples and consumer discretionary at that time was underperforming. So if you take this ratio and then you look at what happened in February, what's happening right now, it looks nothing like February and March. So this tells you what institutions are actually doing. They're spending more time buying consumer discretionary than consumer staples. Both of the sectors actually look pretty good, but consumer discretionary is outperforming. Now we'll look at the stocks that potentially have more upside. Adobe pulled back, RSI is turning back up. We're holding right at the 21-day moving average. Look for a push back above the 9 and 21-day if institutions are interested. MACD's below its signal line, so that needs to improve as a function of price. Bottom line, back above the 9 and 21-day would be bullish this week on Adobe. Advanced Micro Devices, same idea. REITs like ARE looking for a push off the 21-day above this volume by price band, no overhead supply. Very little anyway as we cruise back up to these levels overhead at 172 and 168 in the short term. RSI is above 50, so that tells you to respect this breakout. Look for a follow through this week in ARE. American Tower looking for a bounce back above this volume by price band. Big range, so bottom line we're looking for a move back up to 270 in the short term. Remember, healthcare is outperforming. Sector looks good. Look for Anthem Health to continue this trek higher. If it gets above the 50-day, we could have a nice move from the 21-day up to the 50-day, 266, 267, up to about 272, and then look for a rejection. If no rejection, then look for a test at 274, and then a follow through up to ultimately the 52-week highs at 371. Autodesk, another subscription software model that looks really good for construction. Remember the copper chart. If construction continues to improve, Autodesk sells subscriptions every year. They upgrade their software, their computer-aided design focus, looking for engineers and architects to continue to upgrade their subscriptions. Look for a move back above the 9 and 21-day. RSI is rising. On average volume, looking for higher volume and a push above the 9 and 21-day this week. Bristol Myers Squibb along with Johnson & Johnson, both of those are looking good. Merck also looks pretty good this week. Looking for a follow through and a breakout above this level at 60, 68, then 61, and then 64 ultimately. This looks very strong. Higher highs. Next, we got the higher lows. Looking for a follow through as RSI continues to rise, telling you to respect the trend, and a push off the 50-day this week. Chegg seeing a follow through 3 days in a row last week, Wednesday through Friday. Volume by price support, 9 and 21-day, RSI above 50 and rising. Chegg is probably going to break out this week, I would imagine. Dexcom, I know Mikey was looking at this one last week as well. I believe he's trading it. RSI is rising. Look for a break above this volume by price band and then a test of the 446 level this week. Dynatrace, same idea. Looking for a push above the 21-day. RSI is above 50. MACD needs to turn as a function of price, and we need to see more volume. DT looks pretty good, though, if we can get a follow-through on Monday, Tuesday. Ensign Group, flag breakout this week. Clearing these pivot levels would give us a move up to that 49 level in the short term. Looks like we're headed that way post-haste as RSI continues to rise. Facebook looking for a breakout and a push above the 9 and 21-day. RSI remains above 50. Form Factor looking for a continuation of this bounce. I love these pullbacks on a bullish 9 and 21-day. RSI is above 50. Look for that follow through this week on FORM. Franco-Nevada outperforming as gold consolidates above that 1800 level. If we get a breakout this week, look for Franco-Nevada to continue this bullish trend. Genmab is trending. Look for the trend to continue and break out this week. RSI is above 50 and rising. A number of cannabis stocks saw some strength last week. It could be seeing some rotation into that group. IIPR buys and leases out climate control warehouses specifically for growing medical cannabis throughout the United States, so look for this company to continue to move higher. Mercury Systems, right at the 21-day. If it pops above the 21-day, you got this move between that level at 77 up to around 81.50 or so for a nice day trade or short-term swing. If that continues, RSI would be above 50 and a good confirmation going into the week. If you're thinking about trading Netflix off the 21-day moving average, keep in mind that we like to see 5 to 7 trading days before taking a position after earnings. Earnings wasn't that great for Netflix, so we'll see what happens on Monday, Tuesday. The 50-day is down here where there's very large volume by price support level. If it got down there, I'd definitely be interested in buying Netflix into the second half of the year. Nvidia looking for a bounce. PayPal looking very strong. I know Sunrise Trader is looking at American Express. Also like Visa, Square, and MasterCard, they're all looking very strong. Consolidating over the last week at the 9 and 21 day. PennyMac Financial Services also following through. Looks like a range breakout. If this continues to move higher, look for the depth of this range, about 3 or 4 points on top of this, so 46 ultimately for a short-term swing. Regeneron, along with healthcare, continues to show strength, looking for a breakout this week, along with ResMed, as it continues along its bullish 9 and 21 day moving average, 9 on top of the 21, on top of the 50-day, showing muscle and volume slightly above average. Like to see that above 1 million shares this week as a definite follow-through confirmation. ServiceNow, like all of the previous stocks, same reasoning, looking for a push off of this bullish 9 and 21 day moving average, above the 50-day moving average, and RSI above 50, signaling potential follow-through if volume starts to increase. Teradyne looking for a bounce here as well, with NVIDIA, maybe AMD has some interested parties this week as well. Intel looked okay last week, in addition to KLAC, CLAC. It'd be nice to see semiconductors lead us into the end of the month. Looking for a bounce here for Trade Desk as well. And Viva Systems, which looks like it wants to push off of this level this week. RSI is rising. Above these volume by price bands would mean there's no overhead supply, no one to sell to you. Looking for a follow-through this week in Viva Systems. In addition to the strength that we saw in Bristol Myers Squibb, Merck, Pfizer also looks good. Vertex Pharmaceuticals looks good. Johnson & Johnson has the potential to follow through this week. Look for these pharmaceutical companies to continue to push higher. And maybe companies start hiring even more employees back. Workday would benefit from that. Look for a push higher on WDAY this week. In addition, we saw some Marcus Smith stocks showing relative strength. Check out these names in the bottom of the list here. Most of these look really good, like Align Technologies, BlackRock, Charles River Labs, D.R. Horton, Generac Generators. That usually does well into hurricane season. Look for that to follow through. Intuitive Surgical, Lind. A lot of these look really good, showing relative strength last week when the markets were pulling back. These kept moving higher. In addition to the stocks in green on the opening monologue, the 100% volume scan, this catches stocks that are showing well above average volume. Some of these were traded last week by some of you guys and ladies in the trading room. Watch for these to follow through this week as well. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. I will send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. So be sure to look for that in your inbox. Bottom line, we're watching what VIX is doing. Again, if that continues to move lower, you know what institutions or dealers are going to do. They're going to close their short positions and they're going to turn around and buy futures. The exact opposite could be the case if we start to see puts rolling in very heavy on Monday and Tuesday. That would tell you that institutions, dealers, and market makers are going to sell premium and sell futures to hedge their positions. So keep an eye on that this week. Otherwise, I hope this helps. Take care, and I'll talk to you soon.